Okay, hello everyone, and welcome to our Answer Trust Strategy class. Good to have you here. In today's session, we're going to be looking at supply and demand, or what people call the SnD. Okay, so we're going to try and break down the concept of SnD and the application of it, at least from my perspective, into the market. We're going to be able to see how we can use this concept or this understanding to look for potential areas for trading opportunities and how we can take advantage of this. Now, we're not going to just trade SND alone. We're going to combine them with some sort of confirmation that can enable you to trade, basically have an idea or have a system or a trade plan that you can then go and back test. And then once you have enough data and you're confident with that, you can then use it on your live trade. Okay. So basically, the first question would be, what the hell is SND, right? What does SND mean and what is it? So SND basically stands for supply and demand, right? Right? Now, so supply and demand is a basic concept in economics, right? You all know this from your economics 101 classes where you know that if you, so basically, in everything, even in Nigeria here or anywhere, there's always a supply and demand is always in a tug of war, right? Now, depending on which side is stronger, price would either go up or come down. So think about it this way, right? Okay, let's use I don't want to use dollar and naira because then, I just want to use something common, something basic. Let's say fuel, for instance, right? So let's say there is scarcity of fuel, right? There's no fuel. um that means there's a shortage of fuel, and only very few filling stations are selling or have available to sell, and there's a lot of demand for it. What do you think will happen to the price of fuel? Naturally, you would expect that it will do what? It will go up. So think about face masks during the time of COVID. Before COVID, nobody cared about face masks. The only people who used face masks were people who were doing surgery, surgeons or hospital medical professionals, right? They were the ones who basically used face masks. And then came COVID. Now COVID came, and then the demand for what you call it, the demand for face masks, right, shut up, right? It went up, it went through the roof. What do you think happened to the price of face masks? Before COVID, you'll be able to buy one face mask for like 10 naira or something like that. Literally, for around 5 naira or 10 naira, you'll be able to buy face masks. They don't even sell it one, they sell it in pack. And the actual value will be around 2 for 5 naira or 2 for 10 naira, something like that. And then came COVID. During the height of COVID, you probably buy one face mask because there was scarcity, there was a shortage of face masks, and there was increased demand. And one face mask might go for as much as 500 naira or something like 1,000 naira. The face mask itself did not change, still the same thing. But what happened is the demand for it went up, and the supply for it, there is a shortage in supplies. So basically, in economies, uh, what you call it, when there is increase in demand, so here are two things that affects the price that can make price go up, right? So first one is when there is an increased demand for a particular item, it would force the price to go up, because what will happen is too many people want the same item. There's so much demand, so the price would appreciate. But when there is too much supply, right? When there is too much supply, so imagine if, let's say, for instance, uh, let's say, for instance, we now have refineries in Nigeria, and the refineries they are working as they should, working very well. So working more than very well, and they are pushing out there's more crude oil, there's more natural gas than we can use. So there's now too much supply in the market. What happened to the price of the commodity, of that particular commodity? It will come down because all the sellers have enough to sell, and they're looking for who to buy. So in order to be competitive, they will drop their price, and then obviously you have the price following along. So basically, the main point here is that demand and supply is a key factor in what makes price move. Now, you'll ask yourself, so why am I explaining all of this here? What does that have to do with the forex market? Well, the truth is, the forex, when it comes to forex trading, price is also moved by demand and supply. Now, it's not exactly in the same way, like, we don't have the same, it's not the same because it's not a physical asset. But you need to understand that demand and supply is the main reason why price appreciates or depreciates. Now, the demand and the supply metrics in this particular case are based on orders, right? So based on the volumes of orders that are getting into the market and the direction that the big money or the smart money is, or the composite man is trading in the direction of. Now, it's now our business to go and start looking at all the fundamental economic factors. Yeah, we can do that, but that's not how I trade. But we can see the footprint of the market, the footprint of demand and supply, right, in the charts. That's why we are called technical analysis. We analyze the chart. So by looking at the chart, we are able to deduce the footprint of the market, the footprint of demand and supply, and then use that understanding to build a trading system or a trading plan that we can then look to execute. Remember, success in trading is all about having a specific trading plan and then looking to execute trades when those specific conditions are met. So then the question you would ask is, well, how do we identify supply and demand zones? Because remember, in this particular, when it comes to the chart, we're looking for the supply and demand zones in the chart as potential areas to look for entries. Now, what you need to understand is when it comes to trading, there are two things that price can do. So the market is either bullish, you know, making higher highs and higher lows, or the market is bearish, making lower lows and lower highs. So in a bullish market, right, in a market that is bullish, where price is pushing upward, right, demand zones are what we are looking for. That means we are looking for opportunities to buy. And then in a bearish market, we are looking for those supply zones as opportunities to sell. Now, how do we identify these areas in our chart? So basically, once you look at this, you can see price is making higher highs. So basically, it's moving up in step like this, where price is making higher highs, higher lows, higher highs, higher lows, right? So without even drawing it, you can see that resultantly, price is going up. So we say that this type of market is a bullish market. Well, in a market that is coming down, that means in a situation where price is making lower lows and lower highs, we see this market is a bearish market because you can see that resultantly price is coming down. On my chart here, I have moving average as a 20 and 50 moving average. You can see in a bearish market, price tends to stay below the moving average. In a bullish market, price tends to stay above the moving average, okay? Now, the concepts which you're learning here, you can apply to any time frame, to any instruments, to any financial, basically to any financial instrument and to any time frame, okay? So what are we looking for? What do we mean by these areas of demand and supply, right? Now, so I'm just going to highlight this area here so you can see the area. Just for our example here, we're going to look at this area. So if I ask you, during this area that I highlighted here, would you say the price is bullish or would you say price is bearish? Quickly just type your answer down below. Would you say the market is bullish within this area or would you say that price is bearish? Okay. So if you say it's bullish, that's good. So you'd agree. So if you only what I mean by bullish, would you say price is going up resultantly, or would you say price is coming down? So you see that price is actually bullish, right? And we know that because price is resultantly making higher highs and higher lows. It's going up. Okay. Now, in this bullish market like this, we want to concentrate on looking for buying opportunity. Now, that means we're looking for the demand zones, right? Remember, the areas where price is in a bullish market, we want to look for areas where price is below, like prices at what I call it, a discount. Yeah, let me put it like this. So price is discounted. And those areas are potential areas where we look for those opportunities. Now, let me zoom in a little bit and just start from this very low here, right? So I'm just going to draw out on my screen so you can see something. So all this area, the market is bearish, right? It's making lower highs, lower lows, lower lows, lower highs, lower low. So at this point here, the market is still very bearish. But then price began to break higher, right? So we see that price here has begun to break higher. Now, well, in that case, when price broke above this high here, At this point, we now made a new higher high, and it came from where? This low here. So price now began to make higher highs, higher low, higher highs, higher low. Made basically just what I would like to call absorption, and then continue to make those move upwards. Now, here is the thing. So first of all, we want to identify the market structure. Okay, so we ask ourselves, what is the structure of the market? Is the market bullish? Is the market bearish? And then once we have decided, right? Once we have determined the direction price is going, and then we look for opportunities in that direction. Okay, what happened? Okay, now, okay, so now here's the thing. So we understand that this market is bullish, right? And we look for buying opportunities here. And then in this area here, all this area here, what would you say this market is? Let me just highlight this here. What sort of market condition is this? Is it bullish or is it bearish? Quickly, would you say this area that is highlighted, would you say the market is bearish, or would you say the market is bullish? Okay, so Clifford says bearish. And yes, you can see that this is clearly a bearish market. So in the bearish market, we look for selling opportunities, and we look for those opportunities from the supply zones, because that is a place where price is, way above where it should be. Yes, Samuel says downtrend. Thank you. Thank you also, Emmanuel, who says bearish. So basically, you're seeing that in the market fluctuates within cycles. One time is bullish, next is bearish, again it's bullish, sometimes it might move sideways and then go bearish or go bullish. All of these are how the market moves, and our job is not necessarily to be sympathetic as to whether price is bearish or bullish. No, we don't care if price is bearish or bullish. All we want to do is look for ways to participate in the market in such a way that we make profits. So now let's look at this bearish area, because we have this bearish area lasted for quite some time. Okay, so we can say that the bearishness started from this high here. Okay, so let me highlight this. So you can see the bearishness started from this high here, and then what happened is price began to break. So we had price broke down here, and this is what we call our first break of structure. Again, we have our second break of structure here, which now potentially confirmed that bearishness. So after this second break here, we are, potentially good to start looking for selling opportunities. Now, just keeping it simple. Obviously, if you have a square understanding of the market, you know that there are several ways opportunities would have been able to start looking for before now. But now we'll have double break to the downside, and we say, okay, yeah, this is now a bearish market. And then in the bearish market, we want to look for selling opportunities. Now, here's how I want you to think of the market. When prices, let me just take this out of the way, like so. When price is moving in a specific trend, so in a bullish market, let's say price is moving higher highs, higher lows. What we know is that price wants to continue to move up. But we also know that price is not just going to keep going up in a straight line. Price might eventually want to get here, but it's not going to just move up in a straight line. Most likely what you'll see is it will do something like this, where it makes higher highs and higher lows and higher highs and higher lows until it gets to the actual destination it wants to move. So instead of going from low to the destination in the straight line, price does this. And the reason it does this is because price cannot just move from point A to point B. Usually, price will not just move from a low price to a very, very high price where it wants to really go all in 1 second or 1 day or something like that. Because that would mean that all the orders will have to be put into the market at the same time. And that's not the way price moves. However, what we know is that even though the market is bullish, price will tend to make this pullback. Now, sometimes the pullback might be small like this, right? Other times the pullback might be, average. And sometimes the pullback might even be very, very deep. But irrespective, this is still a bullish market. Now, what we know from price is that, well, when price make, so this, once we've identified the direction, this move, right? The bullish move are actually the trend, right? The trend itself. And while these bearish retracements, we call them retracements. That means, imagine you're driving your car. You don't just put your foot on the gas and then just pedal, just fire it down, and it just goes from 0 to 230 and you stay at 230. What will happen is, because you're moving forward, but you don't start out at 230 kilometer per hour or 120 kilometer per hour. Instead, you start up at 0, you move, you go up to 80. If you go up to 110, you come down to 80, because you're not the only vehicle on the road. So sometimes something will cause you to slow down, and then other times you push forward. So it's what's happening in the market. The market wants to go from point A, which is down here, right, to point B, which is up here. So price wants to go from point A to point B. But in order to do that, it will accelerate, decelerate a little, accelerate, decelerate a little, do that flow over and over and over again before getting to the actual destination it wants to. So what we looked for as traders is, once we've identified the direction that price wants to go, once we've, from our analysis, decide, oh, it seems this market wants to be bullish, right? So we've decided, oh, this market used to be bearish, and now it seems the market is now breaking up bullish, right? So basically what we want to do now is look for opportunity to follow this market bullish. Now, once we've identified that, we want to focus on the section of the market that we're interested in. So in this particular case, these are the areas we want to look for opportunities to buy low. That's the reason why you hear that statement where they say, success in trading is all about buying low and selling high. So this is what they mean when they say buy low and sell high. So price has shown us its hand. If we trace, we look for where could this low come from. And then once we were able to find that, we look for confirmation to buy. We get involved in the trade, and then we let the market flow in the direction it wants to take. So this way, we're not forcing price. Basically, we're just looking to ride the trend, right? That's what true trend following is all about, where we simply look to ride the trend in the market. Now, let's see how we can do that using the concept of supply and demand. Well, so far, I hope you guys are following, right? I hope you guys are following. I hope everybody's being carried along. Now, so you see the concept of what we just said here. This is what I just explained there. Now, although this is the inverse, where price is now bearish. So price, you can see, is making from high to low, to lower high, to lower low, to lower high, obviously here, to lower low, to lower high, to lower low. Now we broke high first, but don't worry, as you get better at this, you'd understand why this is not necessarily a break higher, okay? And remember, it's just a break higher once, and then price continue to make this lower lows and lower highs. So let me zoom in a little bit. Now, sorry. Now, so here's the thing. Now we've identified that the market is bearish, so we want to look for selling opportunities. Now, what we ask ourselves, what we look for is, so in a bearish market, we want to look for the last, or the series of up candles before the down move. Now, what do I mean by that? Let's take this whole area as one down move, right? This is one down move. Now, notice that it wasn't just the market did not just go bearish, every candle bearish till it gets here. There were some bullish pullbacks, there were some bearish, there were some bullish pullbacks, like some bullish candlesticks. But because the market is mostly bearish, the bearishness was pushing price down. And then what do we have? We have the retracements. The market now did what? It retraced from here and pulled back. But notice how this retracement did not go above this previous high. Price stopped somewhere, right? And then went down. Now, what we look for, what we say, okay, what are the areas of SnD? What are the areas of supply and demand here in this market? Is one of the ways we look for them is by looking at the last. So because we are looking for bearishness in this market, we ask ourselves, where were the last set of up candles or bullish candles before within this downward, within this bearish push here? So if I take a rectangle here, you would say this is a big bullish candle here. We can expand it out like this, okay? Again, this is also another bullish candle here. So so it's the bullish candle I'm highlighting here. That's this bullish candle here. You can see this green candle there, right? Is everybody following? Okay, so we identify, so sometimes this is called the FU candle, right? We identify the last up move before the down move. So in this case, there was an up candle here. There was one, you can even refine it even better, okay? Now, in many cases, there will be multiple of those, right? So there will be multiple up candles before, up candles within the system, or down candles within the system, depends on whether you're looking for buying or selling opportunity. Now, with experience and also the understanding of imbalance, so in the last strategy class, I discussed imbalances and how you can use the concept of those imbalances as to look for trading opportunity. So up candles or SNDs, so these SND zones, right? Which basically are preceded by some sort of imbalances, they carry more weight, right? That doesn't mean price, look at, for instance, look at this, right? See how price retraced from here and came back up here. And you see how the market reacted, the price reacted, even though it did not go down, you see that there were some orders that were mitigated within here. And in this case, price wanted to still go up and mitigate the orders that are laying within here before going down. So basically what we then look for is, once we've identified the areas of interest, so let's say price is at this point here, right? So let me do this. I think this will make sense. Let me do this. Replay. And let's just go like this. Sorry. Okay, so we've seen that price has broken down here. So I'm just going to play price. Now we're looking for opportunities to buy. We want to sell in this market, not buy. We want to sell in this market. But we don't just want to sell anywhere. We want to sell, remember, we want to sell high as we're looking to also buy low. But we're not looking to buy in this particular market because the market is bearish. So we're looking for opportunities to sell. So we wait for the price to make some sort of retracement because we understand that markets always tend to do that, okay? So now, as far as broken structure here, as far as made a new BOS, a new break of structure here, we then take that understanding, right? We take that understanding of the break of structure that's occurred there, and we say, okay, where did this break come from? Where were the last up move before the down move? So you can see this big candle we highlighted. You can refine it to this candle here, so that we can refine it to this bullish candle here. And then we also have this one here. So what we do is we wait. We say, okay, let's wait to see how price reacts if it gets back there. And so now you see how price begins to go back up. So what we are doing, remember, there's certainly no guarantees. Price can easily do something like this, right? So price can come up and break down, or price can, come up, get here and break down. Or price can even just keep going up and not even respect any of them. So we understand that, and so even though we've identified an area of supply and demand, we want to confirm, we want to see price begin to react in those, begin to move away from those areas and use them as reasons for selling, right? In this particular case. So we wait and we want to see price get into here. We want to see some sort of rejection. So we look for some sort of rejection candlestick. So if you are If you're a trader, you can go into smaller time frame, look for counter trend line break, or look for break of structure on a smaller time frame. Let's say because this is daily chart, you can go down to the 1 hour chart and look for entries on the 1 hour chart from within this area. Okay, but for now, we're just going to keep it very simple. If price gets to an area we're interested in, we want to see some sort of reaction. Because we're looking for bearish for sales in this place, we want to look for some sort of bearish reaction from that area, and then use that as a reason to get involved in the trade, right? So we wait and we want to see how price moves. So price is still, taps into now price taps into this like this. Now somebody can say, well, this is a rejection from here. And you would not be wrong if you say this is a rejection, right? Now, to keep it simple, we're going to, for every trade we look to take, right, we'll at least go after 1:2, right? If our risk to reward is not up to 1:2, we won't take the trade. Our take profits would be just below the next liquidity target. Because I need you to understand something. The way we look at this market, or the way I look at this market now, is the market is bearish. That means the next point, the next place price wants to get to is this low, right? So I'm looking for an opportunity within here to sell back to this low. Do you get that? So if we get an opportunity, I'll be okay looking for getting involved in the trade and looking to sell back now. So this is price tapped into this zone. It gives us a rejection candlestick. Yeah, by all means, let's take the trade. Now, the reason I know this will end up being a loss, but you need to understand that losses are part of the game, right? You just need to understand that your goal is not to not make loss. Your goal is to have an edge in the market and to follow your system. Now, based on our rule, we go only after at least 1:2. So we're going after this low. Now, this trade does not meet the criteria for 1:2. So maybe we don't take this trade. So it doesn't meet the criteria for 1:2. This is like about 1:1.8 or 1.9. So let's say we don't take this trade. Now, even if we did take this trade, it's fine, right? Now let's see what happens. So price now breaks. So let's assume we took the trade and we made a loss. So yeah, we made a loss. We lost 1% of our accounts. That's fine. Now, price, remember, the context has not changed. How do we mean? Because remember, this high here is this is the high to the low. That means this high here is what we would like to call our protected high. So basically, we don't expect price to go above this high. And then we expect that this is where market wants to come down to. So this is our target, right? So this low here is what we call our targets. Okay, so this is our liquidity targets. Let me adjust that. And this is our target. So this is our protected high, and these are our targets down here. Where's my target? Okay. Now, we also have this area. So anywhere within this area here, if price taps into it and we get a rejection, we are also good to look for sell opportunities. So price continues to move. It taps into it. No rejection here. So we begin to push away from there. So at this point, where price made this bearish candle, right? What we can do is we can set a pending buy stop below this low here, right? And say if price comes back down there, our stop loss will be above that high. We are going after this low here. So this one is up to 1:2, so it's a good enough trade for us to take. And let's see how that goes. So price continues to play around there. Now, if you missed this trade, like if you didn't take a trade here, you can see there's a rejection candlestick here. So this might even be the better trade here, where we take our entry from here. If you use 50% retracement of that would also be fine. But let's just keep it simple. And this will be our entry here. And we see how that moves. So price, you can see instantly rejecting away from that area. And we have price moving to our targets. Did it hit our targets? Not yet. And then boom, we're done. We've made profits. We are out of this trade. Now you can obviously, if you're depending on how, once you get better at this, you understand how you can manage your trades to leave some skin in the game, to hold on to some partials. Now, this whole area here is done. We took 2 trades within here. We made a loss here, and we should not have taken a trade here, but I just wanted to show you what it's like, that yes, even though we take losses, it's fine. and then we're on to the next stage. Now, notice what we're looking at here. The system has not changed, right? It has not changed because why? This is now our new high, right? And this is now our new, well, the low has not formed, but we'll wait for the new low to be formed. Now, we ask ourselves, where was the last up move or the areas of demand and supply within this move here? So I'm just going to delete this one and also this one, okay? So we can see clearly. Now, you can see that there is, first of all, in this particular instance here, there are three areas. So there is one up candle here, right? There's also another one here. Let me, okay, copy this and make it smaller. And there's also another one here, right? Now, obviously, now as you get better at this, you'd learn to be able to refine and, basically just know what to focus on and what not to focus on. But we'll just keep it simple, right? Now, so basically what we're waiting for here is we want to see price make some sort of low and then pull back into one of this area. Now, because this one is too close here, we probably should take it off, but we'll just leave it there, okay? So we're waiting for price to make that or to form that low, okay? And now we formed this low. So this is now our new low, okay? And then we are waiting for what? We want to see price reject from at least this area here. So I might not look to take a trade here, although this, because of the imbalance here, this might make a lot of sense if we get a good trade from there, okay? But that would be the way I'd look at it. So if you were in my last class on imbalance, yeah. So now let's see how price moves. So price, does it get there? Not yet. And then here's the thing, right? You would have times like this. It is perfectly normal. You see how price did not get to any of these ones here. It did not get to any of them here. Now, obviously, if we use this entire candle here, you might see it get there, but then, this is not a trade that I'll even look to take, right? Don't cry over spilled milk, basically. So don't go and start, oh, the market did not get to me, so you now forget about your rules and jump into the next trade just like that. It's fine if you don't get an entry. It is perfectly fine. So now what happens is, notice that price has made a new low here. We have made a new low here. Now, so in other words, this might now be our new high. And let's see where price gives us a low, okay? So let's see, do we break down? Yeah, we're still bearish. We're still bearish. Still bearish. Okay. Okay, now so price has begun to push up. So this is our high and this is our low. We ask ourselves, where are the previous up candles before the down candle? There's one here. You can see it there. There is, nope. There's one there. There's also, so all these ones are too choppy, so I'll probably not pick them. That would be the only one that I would pay attention to. So if price comes here and gives us an entry, we'll look to sell. So let's see, price begins to come back up. If it breaks down below this low, then we go and, we reset and look for another opportunity. So price comes, taps into it. Does it give us a trade? Okay, so price comes, it taps into it. It doesn't give us any clear bearishness, but this bearish candle here. So what we can do is we can set a pending sell stop below the low of that candle and put our stop loss above the high and then go after this low. Is it up to 1:2? Yes, it's up to 1:2. And then let's play price. Does it give us a trade? Now, if price breaks above this high, then this trade is no longer valid. And it does. So price breaks above this high, so there's no trade for us here. Now, at this point, what you notice is that price has made what? It has made a bullish break. So it has broken upward once, right? Now, one break to the upside, it does not change this market from being a bearish market to a bullish market. At least we want to see two breaks. So as long as we just have only one break, I'll wait on the sideline, right? Until price resets back to being bearish. Now, once you get better at this, you'd also be able to see the institutional leg of this market, and you'll be able to see that, yes, even though from a structural point of view, we have lower lows and lower highs and lower lows and higher highs, this move here from an institutional leg can actually be won higher, one big lower low. And then this might all be the pullback, right? So what this means is that if price actually comes back up here, right, I might, based on my own experience, I'll actually be looking for sell opportunities from here, right? Because it's just one break to the upside, right? Even as much as, okay, the imbalance here has been filled. So here is the only one I'll probably look out for, okay? So, but for you now, you might just wait on the sidelines until price begin to break back bearish again. So let's continue to play price. So price is making its move. Now, if we were looking at that area, right, this area here, you can see where did price come in? Price came into here and taps directly into there and gave us a sweet bearish candle, a sweet bearish pin bar. You can see it. We have a clear bearish pin bar. If you were looking to trade something like this, right, if this would have been the trade, our stop loss would be above that high, and this would be our take profits. So this is like, this is where our stop loss would be, and this would be like a 1:7. Okay. Obviously, you take partials along the way, and let's see how price moves. Okay, yeah. So price now begins to break back down. Okay, now remember this. If we break below, okay, now let me pause here. Right. Now, if price were to do something like this, if price, so remember we've broken up once, right? So let me change the color of this thing to yellow. So we broke up once here like this. So we made a higher high, okay? If we break up again, that would be a double break. So at this point, if we break up again, then I would no longer, look for sell opportunities. Instead, I would actually look for buy opportunities. I don't know if that makes sense. We broke up once. I'm still interested in selling. I actually look to sell from here, and price is going my way. Now, certainly, I would have taken partial profits. I have my own ways of taking partial profit, but I would have taken partial profit and just allow the rest run. If price comes and break above this high, like so, then this will mean that this market is now bullish. It's no longer bearish. And I'll now start to look for opportunities to buy. I'll start looking for the last down candle before the up move to buy. But if price doesn't do that, then I'll keep on looking for sell opportunities. Does that make sense? Are you guys following? Is it clear? Okay. Type in your response in the chat box down below. Okay. So let's see how price moves. Price is making its move. I'll just wait. Let me fast forward this a bit. Okay, now price is breaking back down. So we're still looking bearish. And at this point, I'll pause. So notice what happened is, see how we made another good trade on our another good profit on our trade. Price has now made a new, right, break of structure to the downside, right? It's broke back down, and this is now our new low. Okay, so the high, this is our high, and wherever this forms would be our low. So let's see where the low actually forms. Let's see if it's still going down. And yes, this is now our low. So we ask ourselves, where were the previous areas of interest? Where were the previous areas of support and demand, or supply and demand? We have a bullish candle before the bearishness here. That's one. We also have another one here. You can see that bullish candle, the bullish pin bar. The bearish pin bar there is the bullish candle. And if price comes into this area or this area and we get a rejection, then I would look to sell. Okay. So let's see how price, or what price does if price gets there. Okay, so price taps into this area. We have a rejection candle. Now, this is a rejection candlestick. Well, to keep it simple, let's actually trade it. Let's look to see if we can trade it. Now, remember, it has to meet at least 1:2. Okay, if it doesn't meet 1:2, we won't trade it. So our target will be here. So this does not meet our criteria because this is the 1:1.6. So we won't take this trade, even if it goes on to hit profits. Okay, so no trade for us because it doesn't meet our criteria. Now let's see if it breaks down. So if it comes below this low, that stage is complete. So that you see price has hit profits, but we are not in the trade because it did not meet our criteria, and it is fine, right? Did it close below? Let me see. Did it close below? Okay, yes, now it's definitely closed below, right? So this is now, you can see that, yes, we did not participate in the trade, but it is fine. Okay, so we wait for the new low. We have our new break of structure down here. And once the new low is formed, we have our areas to begin to look for supply and demand zones. Okay, let's wait. And price is now break up. So yes, now price, okay, no. Price is still holding down. Yeah, from my own perspective, I'll probably use this as a breakup, but I'll still keep this in mind. Okay, so price begins to, right? So now price begins to break back up, right? Now, this area here would be one I would have kept in mind, but I would also have kept this one in mind, right? Okay, and let's see. Do we get a rejection candlestick from there? Give me a rejection. Yeah. So this candle here is a good enough rejection candlestick. It broke below the low. So I'd have gotten involved in a trade like this. Entry there, stop loss above this high, take profits this low here. Now this is a 1:4, so yes, it is a good enough trade, almost a 1:5. So if it goes to hit my stop loss, that's fine. Otherwise, if it gives us profits, we're good too. So we wait and the price is moving our way and we hit our targets, right? So notice, let's see how many trades we've taken. So we've taken 1, 2, I know we took a third trade. We took a loss here, right? So we took 3 trades. One of them was a loss. 2 were wins. So we lost 1%. We made 1:7, almost 1:8. We made 1:5 here. So we're looking good. We repeat the process again. This is our new high. This is our new low. And we ask ourselves, where did the move come from? Where is the last up candle before the down candle? And in this case, it would be here, as you can see. And so this one is not useful anymore. And if price taps into there, we are good to go looking for opportunities to sell. Okay. So you could see we're not doing anything complicated. You know, trading doesn't have to be, if your trading is complicated, then you're probably doing something wrong, right? The price breaks below, so no, this is no longer valid for us to watch. This is now our new high, okay? And we're waiting for the new low to form. I think that's the new low forming there. And then we ask ourselves, where did the move come from? Where was the last up candle before the down candle? And I see one there, here, like so. And if price comes in here, we look for that sell opportunities and see if we get a trade to take this even lower. And see price taps into there. Let's see. It taps into there, it's beginning to reject. So yes, probably I'll take a trade at the close of this candle. So this is probably going to be a loss, a stop loss above there. Maybe up to 1:2. It's not up to 1:2. It's 1:1.8. So it's not good enough for us, so we don't take it. And price, this might actually go on to hit targets, but it's fine. Rules are there to be respected. Okay. So let's see, let me make this faster. So you see, in this particular case, it actually goes on to hit targets, but we didn't take the trade because it didn't meet our criteria. Okay, so again, so you can see at this point, you know, it's now repetitive. We're doing the same thing over and over again, right? We're doing the same thing over and over again. Now, I'm applying this on the daily time frame. You can apply this to any single time frame. Now, if you're applying this on a lower time frame, let's say 30 minutes, which is any time frame, lower time frame like 30 minutes, 1 hour, 4 hours, yes, you're paying attention to the structure on those time frame, but because the time frame you're looking at is lower, you also want to understand the structure on the daily time frame or weekly time frame. So if the market is bearish on the weekly time frame and you're following the bullish side on the lower time frame, you probably run into some trouble. So it's better you're looking for the same direction. So if it's bullish on the higher time frame, wait for the market to get back bullish on the lower time frame and then look to follow the SNDs in that direction. Okay, so that's about it for me today. It's kind of exhaustive to a degree, and I hope you guys enjoy the class or the session today or based on what we discussed. So just click type in your questions down below and let's get into them. But so far, also typing down below if you enjoy the session, if you enjoy the class, if you learned something, or if it's clearer, if you learned something new, if you understand SNDs or support and demand much better now, and if you can see how to apply this to a trading system. Okay. Yeah, thanks.